Welcome to Inside Engine Room, where we decode the complex machinery of the global economy to protect your financial future. Imagine waking up in early 2026, witnessing a financial earthquake that starts quietly, but soon shakes the entire world. The epicenter of this coming earthquake is not gold or oil, but a metal that has been quietly undervalued for decades. We are talking about silver, a critical resource that is currently facing a supply squeeze unlike anything we have seen before. Global trade dynamics are shifting rapidly, and the supply chains we rely on are becoming more fragile by the day. Industries that depend on raw materials are finding themselves in a desperate scramble to secure what little inventory remains available. Investors who are paying attention see the warning signs while the majority remain oblivious to the storm gathering on the horizon. Today we will dissect the specific event in 2026 that triggers this crisis and what it means for you. We will explore the massive disconnect between paper promises and physical reality, a gap that is about to close violently. Join us as we step into the engine room of the global economy to understand the mechanics of this coming wealth transfer. Let us fast forward to May 1st, 2026, a date that will likely go down in history books forever. On this specific day, China implements a strict new mechanism to control the export of refined silver to the world. News outlets around the globe scramble to report that the world's largest producer is turning off the tap on supply. This single policy decision effectively removes 60 to 70% of the global refined silver supply from the open market. For industries relying on this metal, from electronics to green energy, this announcement is nothing short of a catastrophic heart attack. Silver is not just a precious metal for jewelry. It is the most conductive element on Earth, essential for modern technology. As the news spreads, panic buying begins, instantly sending premiums on physical bullion skyrocketing, while paper prices lag behind. The supply chain, already strained by geopolitical tensions, snaps completely under the pressure of this sudden and massive export restriction. Strategic stockpiles in Western nations have been depleted for years, leaving them with zero buffer against this aggressive Eastern move. This move by China is not accidental. It is a calculated strategy to secure resources for their own domestic industrial dominance. They understand that he who controls the strategic metals controls the technological future of the 21st century economy. But the supply shock is only the spark. The real explosion comes from the structure of the market itself. We must look at the dangerous imbalance between physical metal and the paper derivatives that claim to represent it. Current data suggests a terrifying ratio. For every single ounce of physical silver, there are over 300 paper claims. Imagine a game of musical chairs where 356 people are circling just one single chair. When the music stops, which happens when physical delivery is demanded, the vast majority of claimants will be left with absolutely nothing. The COMEX and other exchanges operate on a fractional reserve basis, assuming that investors will never ask for the real metal. This system works fine when confidence is high, but creates a deadly trap when supply chains are suddenly broken. China's export ban acts as the force that knocks over the first domino, exposing the fragility of this paper market. We will likely see a decoupling where the paper price becomes irrelevant and the physical price discovers its true market value. This is the classic run on the bank scenario. But instead of cash, the panic is for tangible industrial assets. Most exchange-traded funds will force settle in cash, leaving investors with depreciating currency instead of the hard asset they wanted. Receiving cash settlement during a hyperinflationary spike is the worst possible outcome for anyone trying to preserve their purchasing power. This silver crisis serves as a magnifying glass, revealing deep structural cracks in the foundation of the US dollar itself. To understand the gravity of the situation, we must look at the macroeconomic backdrop, a $38 trillion national debt. The government has painted itself into a corner where the only solution to paying old debt is printing new money. This creates a death spiral of confidence where every new dollar printed dilutes the value of the ones already in existence. Inflation is not just a statistic. It is a hidden tax that erodes the life savings of the working class daily. As the purchasing power of the dollar collapses, the nominal price of real assets like silver must mathematically rise to compensate. This is why silver is not just a commodity trade. It is a flight to safety from a failing fiat currency system. Legendary investor Ray Dalio has been warning us about this specific phase in the long-term debt cycle for years. He explains that all empires eventually decline when their debt becomes unsustainable and they resort to massive currency devaluation. Even Warren Buffett, the eternal optimist on America, is making moves that speak louder than any of his public statements. Buffett has accumulated a record cash pile of nearly $400 billion, signaling he sees no value in stocks. He is aggressively selling beloved stocks like Apple and Bank of America, preparing his war chest for a major collapse. When the Oracle of Omaha retreats to the sidelines, it is a clear signal that the financial weather is about to turn violent. So what does this mean for you, the individual investor trying to navigate these treacherous waters without a billion-dollar team? The solution lies in a fundamental shift of mindset, moving from paper promises to physical reality and tangible ownership. Owning physical silver is not just an investment. It is an insurance policy against the incompetence of central planners. Diversification is key, but true diversification means holding assets that do not rely on the solvency of a counterparty. Silver stands at the intersection of monetary history and the industrial future, making it a unique asset for this decade. The crisis of 2026 will destroy wealth for many, but it will also transfer immense value to those prepared. By taking action now, you are positioning yourself on the right side of the most significant wealth transfer in history. At Insight Engine Room, our mission is to provide you with the blueprints you need to build a fortress of wealth. If you found value in this analysis, make sure to subscribe and join our community of forward-thinking investors. Thank you for watching Insight Engine Room. Stay vigilant, stay prepared, and we will see you in the next video. Let us dig deeper into the supply chain mechanics. Silver mining is energy-intensive and cannot simply be ramped up overnight. It takes years to permit and build a new mine. The supply response to a price spike will be incredibly slow. Meanwhile, demand is exponential. The green energy transition is hungry for silver, and that hunger is not going away. Every electric vehicle requires significantly more silver than a traditional combustion engine car, driving up structural consumption. The rollout of 5G networks worldwide is another massive sink for silver, locking it away in infrastructure for decades. Unlike gold, which is hoarded, silver is consumed. Much of it ends up in landfills, lost to the market forever. Recycling helps, but it is costly and inefficient. It cannot bridge the gap created by a sudden export ban. Mexico and Peru are major producers, but political instability there poses further risks to the fragile global supply chain. Labor strikes and resource nationalism in Latin America could coincide with China's ban, creating a perfect storm for supply. Institutional investors are starting to wake up. Even a small allocation from them would overwhelm the tiny silver market. The silver market is incredibly small compared to stocks or bonds. It takes very little money to send prices vertical. When capital flees failing equities and bonds, it tries to squeeze into the narrow door of the precious metals market. History shows us that silver moves explosively. In past bull markets, it has delivered life-changing returns in short periods. The Hunt brothers tried to corner the market in the 80s. This time it is sovereign nations cornering the supply. The BRICS nations are actively accumulating gold and silver to back their own currencies and bypass the US dollar system. As governments push for central bank digital currencies, physical silver remains one of the few private anonymous assets left. Financial privacy is becoming a luxury. Holding physical metal restores your sovereignty and freedom from digital surveillance grids. Central banks are buying gold at record paces. They know the fiat system is resetting, and they are preparing. The gold-to-silver ratio is historically stretched. Silver is cheap relative to gold, offering higher potential upside for investors. Silver is like a coiled spring that has been compressed for years. The release of this energy will be spectacular. Knowledge is your best defense. Understanding these macro trends puts you ahead of 99% of the population. However, caution is needed. As prices rise, scams will proliferate. Only buy from reputable dealers and verify your metal. Whether you choose government-minted coins or industrial bars, the key is to hold the physical asset yourself directly. Remember the risk of bail-ins. Money in the bank is technically a loan to the bank, not your property. Silver is also a way to pass down generational wealth. It is a tangible legacy that survives currency collapses. It allows you to preserve the fruits of your labor and pass them on to your children intact. We are echoing the 1970s, but with much higher debt levels. The outcome for precious metals could be even more extreme. Central bankers are running out of tools. They can no longer hike rates without crashing the debt-laden economy. They are trapped between allowing high inflation or triggering a massive depression. Either way, real assets win. Real estate is illiquid and taxed. Silver is liquid portable and private, offering advantages during times of crisis. In an emergency, you can carry a significant amount of purchasing power in a small bag, unlike a house. The psychological benefit of owning gold and silver is peace of mind. You sleep better knowing you are insured. We are currently in the early awareness phase. The mania phase has not even begun yet for silver. Contrarian investing is difficult but rewarding. You must be willing to act before the herd realizes what is happening. Even if prices soar, it will take years for new supply to hit the market, keeping prices high for longer. Technology helps mining, but geology dictates the pace. We have picked the low-hanging fruit. Remaining deposits are deep. Rising energy costs also put a floor under silver prices. It costs more diesel to dig the metal out. Silver is energy in solid form. As energy becomes more expensive, silver must appreciate to justify its extraction. The lack of a circular economy for silver means we are burning the candle at both ends: high demand, low recovery. Substitutes for silver are inferior. In electronics, nothing conducts electricity as efficiently as silver does. Physics dictates that silver will remain the king of conductivity. There is no magic material to replace it soon. The defense industry also relies on silver. In a geopolitically tense world, military demand is non-negotiable. Strategic vulnerability is a major concern for the Pentagon. They cannot afford to run out of this critical metal. We may see governments re-enter the market as buyers to rebuild strategic stockpiles, adding massive demand pressure. When the public realizes the government is buying, the stampede into coin shops will strip shelves bare in hours. Online dealers will crash under traffic load. You do not want to be trying to buy when everyone else is. By the time the notification hits your phone, the price may have already gapped up beyond your reach. The smart strategy is dollar cost averaging. Accumulate a little bit every month regardless of the price fluctuations. Consistency builds a fortress. You do not need to be rich to start, you just need to be disciplined. While crypto has its place, silver has a 4,000-year track record. It does not require electricity to exist. In a cyber attack or grid-down scenario, your digital wealth vanishes, but your physical silver remains in your hand. Do not put all your eggs in the digital basket. Physical insurance is necessary for a robust financial survival plan. Pension funds are underfunded and invested in paper assets. Do not rely solely on them for your retirement security. Becoming your own bank comes with responsibility, but it also grants you freedom from systemic failures and freezes. Think about security. If you hold it, you must protect it. Invest in a good safe and keep quiet. The first rule of Silver Club is you do not talk about your silver stack. Loose lips sink ships. Understand the tax laws in your jurisdiction. Some coins are exempt from capital gains taxes in certain regions. The goal is not to hold silver forever, but to trade it for other undervalued assets when the ratio peaks. Investing is about riding cycles. We are entering a commodity supercycle where hard assets outperform financial assets. The greatest fortunes in history were built by identifying these macro shifts early and positioning accordingly. Do not let analysis paralysis stop you. The perfect time to buy was yesterday. The second best time is now. Price suppression is a gift. It allows you to accumulate more ounces for your fiat currency before the reset. When the manipulation ends, the reversion to the mean will be violent and profitable for physical holders. Looking ahead to 2030, we will likely look back at today's prices as the bargain of the century. A new generation is discovering sound money. The movement is growing, bringing fresh demand to an old market. Online communities are educating millions about the rigged nature of the paper market, fueling the physical squeeze. If everyone bought just 1 ounce of silver, the global supply would vanish instantly. The power is in numbers. Support your local bullion dealers. They are the front line of this battle for honest money and fair pricing. Be wary of paper ETFs that do not guarantee delivery. If you cannot hold it, you do not own it. If you must use the stock market, look for fully allocated funds that actually hold the physical metal in vaults. Mining stocks offer leverage. When silver rises, miners can rise 2 or 3 times as much, but with higher risk. However, miners face political risks. A government can seize a mine, but they cannot seize the coins in your safe. Build your pyramid correctly. Physical metal is the safe foundation. Mining stocks are the speculative peak for growth. Track your net worth in ounces of silver, not just dollars. It gives you a truer measure of your wealth. This is a marathon, not a sprint. Do not get discouraged by short-term volatility. Focus on the long-term fundamentals. Daily price smashes are noise designed to shake you out. The macro trend is the signal you must follow. Wealth transfers from weak hands to strong hands during corrections. Be the strong hand that accumulates the dip. There is a visceral feeling to holding real money. It connects you to history and reality in a profound way. Fiat currencies have a lifespan of about 40 years. Silver has been money for thousands of years without failing. We are witnessing the end of the dollar's hegemony. In the new monetary order, tangible assets will rule. A multipolar world requires neutral, trustless money. Gold and silver are the only assets that fit this description. We prepare not because we are pessimists, but because we are realists. Preparedness eliminates fear of the unknown. Ultimately, this is about protecting your family's future and ensuring you have options no matter what happens economically. To recap, China's export ban, U.S. debt levels, and the paper market collapse are converging into a perfect storm. The signs are clear for those willing to see. The question is not if it will happen, but when. Share this video with those you care about. Helping others prepare builds a stronger community for everyone. Subscribe to Inside Engine Room for more deep dives. We are committed to guiding you through this transition. Our team works tirelessly to analyze the data so you can make informed decisions for your financial portfolio. Time is the one asset you cannot get back. Use it wisely to position yourself before the window closes. The future belongs to those who prepare for it. Let silver be the bridge to your financial prosperity. We appreciate your time and attention. Your financial education is the best investment you can ever make. Check out our other videos for more insights into the global economy and how to protect your wealth. Remember, this content is for educational purposes. Always do your own research and consult a professional advisor. This is Insight Engine Room signing off. Stay safe, stay invested, and we will see you next time.